Hey guys, welcome back to my channel. It's CJ Investing here, and then today we'll be talking about 5 passive income stocks to buy right now, according to this article. So in this article, tech and growth stocks have been taking a beating due to concerns related to rising inflation and subsequent interest hikes by the Federal Reserve. During such uncertain times, investors are looking to companies with a stable bottom line and cash flow that could generate decent passive income. Several market analysts feel that dividend-paying stocks might be a key to preserving your portfolio from diving deep into the red at a time when equities are fluctuating dramatically between losses and gains. So if you're a long-term investor, you don't really have to worry about that too much. Just buy whenever you see a deal on a company that you love. But according to a report published by Janus Henderson Global Dividend Index, C19 results in the global payouts falling 12.2% in 2020 to 1.255 trillion, reflecting a 10.5% underlying fall. 1 out of every company stopped paying dividends, and 1 out of every 5 trimmed its payout, while the other 2/3 increased or held it constant. Banks contribute to 1/3 of the worldwide dividend cutbacks in terms of value, well over 3 times that of oil majors, which was the next mostly adversely impacted industry among the world's major equity markets. The impact was more extensive in Spain and France, which 71% of corporations making cuts as opposed to only 9% in Canada. The relative stability of dividends in 2020 underscores the need to diversify income worldwide. Dividend payouts differ dramatically from one section of the world to the next, as well as between various sectors and businesses. As a result of the pandemic, investors cannot know when or where the next crisis will strike, so diversifying their portfolios can help limit risk. As per report by McKinsey, increased dividends will make shares more appealing to retirees looking for a steady quarterly income. Dividend-paying stocks are considered stable and stable in times of certain returns and growing volatility. Policymakers should support this movement by ensuring that dividends and capital gains are taxed equally. Some popular companies, such as Coca-Cola Company, ticker symbol KO, have been increasing their dividends for the past 50 consecutive years and are a part of the dividend aristocrat list. The chief income strategist at the Oxford Club, Mark, said, "When you own a dividend aristocrat, you own shares of a business whose management has proven it understands its fiduciary responsibility to shareholders." He further elaborated that by targeting a quarter century or more of yearly dividend increases, there is a lower risk of a company making impulsive and expensive investments or ill-timed stock buybacks. Furthermore, you can be certain that it is a corporation that understands how to enhance cash flow in order to keep the yearly dividend increases coming. Popular stocks such as Verizon Communications, VZ, Wells Fargo and Company, WFC, and ExxonMobil Corporation, XOM, are some of the best passive income stocks to buy right now. I agree, all except for, I guess, Wells Fargo. I'm not too big on Wells Fargo and oil, but I agree those are still decent companies if you're into oil. And as far as Wells Fargo, I believe there are better banks like JP Morgan, even PNC, and Bank of America, but that's just my opinion. Our methodology In this article, we took a look at the 10 best passive income stocks to buy right now. We have analyzed the business fundamentals, analyst ratings, and growth prospects of each company over 912 hedge funds, tracked by Insider Monkey at the end of Q1 2022, were analyzed to determine the hedge fund sentiment. 4.3%. Realty Income Corporation is a San Diego, California-based real estate investment trust. It's a REIT that invests in a diversified real estate portfolio. The company pays out monthly dividends through the proceeds it generates from around 11,280 properties. Realty Income Corporation was founded in 1969 and since then has paid monthly dividends consecutively for the last 622 months. Whew, that's a long time. That's a long time. Since its listing on the NYSE in 1994, Realty Income has increased its dividend over 115 times. In a note issued to investors on May 23rd, Andrew at Wolfe Research gave Realty Income stock a peer perform rating with a price target of 73, and that's higher than what it's at right now. The company declared a monthly dividend of 24.7 cents per share on May 17th. The dividend will be paid on June 15th to the shareholders of record on June 1st. Realty Income Corporation posted its Q1 2022 results on May 4th, where it surpassed the quarterly top line and bottom line estimates for the period and reiterated its FY22 funds from operations guidance of $3.88 to $4.05 as opposed to consensus estimate of $3.95. The next one on the list is Home Depot. This is one that I personally own and love. So the number of hedge funds, as you can see, is 75. The dividend yield as of June 3rd is 2.49%. Home Depot is a Georgia-based home improvement retailer that provides tools, construction products, appliances, and services. America's biggest firm in the home improvement industry is known as a market leader and a low-cost provider. The firm has been paying a quarterly dividend of $1.90 Q1 2022, reflecting an annual dividend yield of 2.49% as of June 3rd. On May 20th, Stephen at Citi increased the price target on the Home Depot from $327 to $348 and reiterated a buy rating on the stock. The analyst increased the FY22 earnings forecast following the company's quarterly results. The Home Depot's total inventory of new houses has surpassed 142,700 level. It is a positive indicator because once these houses are bought, there is a high probability that the owners would have to pay for home improvement repairs, and it would be highly beneficial for a company like Home Depot. So the next one on the list is Federal Realty Investment Trust. Number of hedge fund holders 23. Dividend yield as of June 3rd 3.82%. This is one I'm not as familiar with. Federal Realty Investment Trust is another REIT on our list that invests in shopping centers across the mid-Atlantic states like California and South Florida. We are inclined towards REITs because they are mandated to pay out at least 90% of their taxable income to shareholders and thus form good passive income stocks. On May 12th, RJ Milligan at Raymond James upgraded Federal Realty Investment Trust from a market perform to a strong buy rating with a price target of $140. The analyst highlighted that the recent sell-off in the equities market provides an opportunity for investors to go long on the stock due to attractive valuation in absolute terms as compared to its peers as well. Furthermore, the bottom line of Federal Realty Investment Trust is expected to increase by single digits for the next few years. Of the 912 hedge funds in Insider Monkey's database, 23 held a stake in this. So next one is Medical Properties Trust, MPW. That's the ticker symbol. Number of hedge fund holders are 16. You have the dividend yield as of June 3rd is 6.69. So this is a high yielder. But beware with the high yielders. Make sure their financials line up and they are able to maintain that high yield and increase it for years to come. Just something to keep in mind. Medical Properties Trust Inc. is a Birmingham, Alabama-based REIT that invests in healthcare facilities and leases them out to operators. The company declared a quarterly dividend of 29 cents on May 26th. The dividend will be paid out on July 14th and will be eligible for shareholders of record on June 16th. Medical Properties Trust has grown its operations significantly in the last few years. The firm's gross asset value has increased from $10.1 billion in 2018 to $22.2 billion as of Q1 2022. The increase in gross asset value has also resulted in a significant jump in revenue from $704.7 million in 2017 to $1.55 billion in 2021. As of June 3rd, Medical Properties Trust dividend yield stands at 6.69%. So it's held by 16 hedge fund owners. Okay, and the next and last one is Brookfield Renewable Partners LP, ticker symbol BEP. Number of hedge fund holders is 18. Dividend yield as of June 3rd is 3.57%, so it's in line with most of the other ones. I'm not too familiar with this one either. So Brookfield Renewable Partners LP is a Toronto-based limited partnership that owns and operates renewable energy assets across the world. The portfolio of firm comprises hydroelectric, solar, wind, and storage facilities in Asia, Europe, North America, and South America. On May 9th, Brookfield Renewable Partners LP received an upgrade by Sean Stewart at TD Securities from a hold to buy rating with a price target of $41 following the Q1 2022 results. The analyst highlighted that corporation is well prepared to face the short-term challenges in the long run. Brookfield Renewable Partners will benefit due to increased focus on cleaner energy and reduction of carbon emissions. The company can be expected to be a beneficiary during inflationary times as 70% of its revenues are indexed to inflation. Well, that's a good sign if y'all looking for a company that benefits from that. In addition to Brookfield Renewable Partners, stocks such as Verizon, Wells Fargo, ExxonMobil, or some of the other passive income stocks attractive hedge fund investment. So these were just some companies. I thought this article was interesting. I wanted to check it out. I personally own Home Depot from this list in my Roth IRA, and I used to own Realty Income. I might decide to get back into that investment because I think it's a really good company. But just do your due diligence or your research before you invest, and make sure the company that you invest in can maintain their dividend based on their financials, based on their history. And you just want to do your research. Be well informed before you make an investment, and don't invest all of your money or more than you're willing to risk. So I just want to thank y'all for watching. I didn't plan for this to be too long of a video, but I hope y'all have a blessed rest of y'all day. Keep grinding, keep striving for greatness, and I love y'all, and I'll see you next time. Peace.